Hey, what's going on, everyone? Daniel Betancourt here with Team Betancourt of eXp Realty. And today's a special day. I'm going to be presenting the rent to own options. These are pathways to home ownership that many potential home buyers and renters out there have no clue about. So I'm really excited today to be sharing this PowerPoint that I've created, kind of outlining the options for people out there who are interested. Maybe one day they'd like to be a homeowner, but they're not quite ready yet. Maybe their credit score is a little bit shy of where it needs to be to get a mortgage approval. Maybe they have 1 year at their job and they should have 2 years of history at their job. So the rent to own options that we have are great for people who need kind of a bridge program where you're advancing from being a renter and you're working your way to becoming a homeowner. So I'm going to be sharing that information with you right now. And if you would like to connect with me at any point in the future to learn more about this, my phone number is right there below. And you can also visit teambetancourt.com. So let's check it out. Okay, so I've got this information here, and these rent-to-own options, they're pathways to home ownership, and our website is centralfloridapads.com. So I am Daniel Betancourt. I've been selling real estate here in Central Florida for 18 years, and married to my wife. She also sells real estate with me. I have 2 kids. I'm a branch manager at eXp Realty. I'm also a realtor coach for agents that need coaching out there on how to be more productive. And we specialize in residential sales, rent to own, new construction homes, foreclosure avoidance, investment opportunities for you investors out there. And really, our goal is to help you achieve your goal. So here's the team right now. We're always growing, by the way. If you're out there and you want to get started in real estate, connect with me and I can show you the steps for doing that. But that is a discussion for another day. Here's the team, myself and Nicole. Daniel Bracho has been with me on the team for many years. Luis Mendez, he's great. He's all over social media. Jose Reyes is an MBA, and he's fantastic. A lot of us are bilingual. Some of us trilingual. Ricardo Martinez, a retired Army veteran, fantastic agent. Jeffrey and Yolanda Red, our husband and wife team that work together, and they are awesome to work with. Zachary Green is really getting started in real estate, and he's learning a lot really fast, and he's always willing to go the extra mile. And we have V, who is a member of our team. He works a lot of customers on the north side of town, and he's also fantastic. And we have Katia Tonini. She is one of our trilingual agents, as V is as well. And so we can help customers in English, in Spanish, in Portuguese, and other languages as well. So just want to share a little bit about renting a home versus owning a home. So when you renting a home, it allows you flexibility to move whenever you want without a penalty after the lease ends. Of course, if you end your lease early, you might have a penalty. Your payment is fixed. So it's fixed for the term of the lease, and you don't have to worry about it adjusting during that lease period because you have a contract. The landlord typically handles the repairs and covers those expenses. After the lease period is over, the landlord can raise the rent, and that's something that is affecting a lot of people right now. They're getting notifications that in the future, their lease price will be going up, sometimes dramatically, and it's causing a lot of hardship for folks. The other issue is sometimes your landlord decides they want to sell. So I'm working with someone now who wants to sell his house, and he's got a tenant in the house, and the tenant's been there for years, and it's a big hardship for the tenant when a homeowner decides to sell and the renter's been there for a long time. So owning a home, we've all heard of the benefits of owning a home. You enjoy a sense of stability and community. You're setting your roots down. Owning a home typically builds equity. You are responsible for the costs, repairs, and maintenance. When you're a homeowner, that's part of the magic and joy of being a homeowner. But you can also make improvements as you wish. You can personalize the house as you wish. Owning a home, a lot of times it requires a large financial commitment and a long-term commitment, a mortgage that you have to sign a contract that you're going to make these payments for years and years and years, and you can't just walk away from that without penalties. Homeowner can potentially make a lot of money or lose a lot of money depending on what the market does. So as we've seen, in an up market, people earn a lot of equity in sometimes a short amount of time. And if you were a part of the real estate community, back in 2008, when we had a mortgage crisis and a foreclosure crisis, the opposite can happen. But long-term, historically, homes appreciate in value, which leans the larger benefit is with owning a home. But it's nice to have options. Maybe you want to own a home, but you're not able to right now. Maybe you are able to right now, but you're not sure if you want to live in this town. Maybe you're not committed to the town. Maybe your employer is considering relocating you. So maybe you have all the qualifications in the world to purchase a home, but there are many reasons why people choose to rent. So what I'm sharing today are 3 other options outside of renting and purchasing. So these paths are rent-to-own programs. So I'll be going over 3 rent-to-own programs. The first one is a lease with the option to purchase. We've all heard of lease with the option to buy or rent with the option to buy. That's what I'll be covering as number 1. Number 2 is a lease purchase. And number 3 is a lease with the right to purchase. So they're similar in some ways, but they have important differences. All right. So the benefits of rent to own is the home's more accessible. A rent to own agreement gives people who may struggle to qualify for a mortgage a different path towards home ownership. So in other words, where the requirements to obtain a mortgage might be strict, they might need higher credit scores, you might need higher income, rent to own are typically easier to get into. They're more accessible. Financial growth. So doing a rent to own allows renters more time to build their credit, boost their income, and take steps to become financially stronger. Maybe they want to pay off some debt. Maybe they want to increase their credit scores and get a better interest rate. So by doing that, you're able to obtain better mortgage terms in the future because you've had time to improve your financial situation. You also will have a fixed purchase price. So when you enter into a rent to own contract, you're agreeing on a future price now. So you don't have to worry usually about that home price, the seller wanting to charge you more than what you were originally anticipating. So you can fix a future price now. That's one of the huge benefits. You can also build equity. So because you are securing a future price now, as home values appreciate, you're building equity even though you don't own that home. Now, of course, to realize that equity, you have to become a homeowner. But in the meantime, it's a way that you can build equity, and no renter, just a traditional rent, you don't build any equity as a renter. The other really cool thing is you get to try before you buy. So with a rent to own program, you're renting a house that you may buy in the future, and you get to try it out. So imagine if you were buying a car and they allowed you to drive it for a month before you decided to buy it. That doesn't typically happen. A lot of people, some people buy cars and then a couple of weeks after they buy, they don't like it and they trade it in, lose a lot of money. So this allows you to try the home before you buy the home. Maybe a year later, you don't love that house as much as you did in the beginning. Maybe a year later, you find out that you don't love your neighbors as much as you thought you might. Maybe you didn't realize the traffic was going to be horrible because on the days that you visited the house, it was a weekend and there was never any traffic. But as soon as you moved in and had to drive to work, there was traffic and that became a burden. So being able to try before you buy is very valuable. All right. So with a lease with the option to purchase, this is where a seller will enter into an agreement with a renter. That agreement requires you, the renter, to pay the homeowner something called an option fee. So that option fee is basically a fee that you're paying to reserve the price that you agree on now. It's allowing you to reserve that future price. You have to pay for that because what if home values double? Then that seller is out a lot of money. And so rather than being out a lot of money for free, they can capture some money with an option fee. It also gives the seller some security because the seller feels like, okay, this renter, he's a little higher level renter than a typical renter. He's planning to buy my house in the future. He's willing to pay me an option fee so I can secure a future price. And what if that renter decides not to purchase a house later? Well, the renter would forfeit that option fee, and at least the seller has a little bit of security and money out of the transaction. So that's what the option fee is. You can work with the seller also to agree on a future price after your lease expires. So as you're entering into this contract, you're agreeing on the lease terms, but you're also agreeing on a future price. The process usually involves an appraisal to determine how much the home is worth. So that's part of the process. The option fee is a security measure that reserves your future price, and it protects the seller if you choose not to purchase in the future. If you decide not to purchase at the end of the lease period, you will forfeit your option fee and any rent credits. So the rent credits are something where you're paying a little bit more than a typical rental fee to rent the house because a portion of that rental price is going to be applied towards your future purchase. So with every rent payment that you make, a little bit of money is set aside as a credit for you to help you purchase a house in the future. Not all rent-to-own programs have that, but some do. And a lot of these option programs, if you choose not to purchase the home, that money that you were paying extra to the owner, you lose that. So that's important to know. Okay, number 2, the next one is a lease purchase agreement. So a lease purchase agreement, this is a great program that's become really popular over the last few years with our company. It allows us to use a lease purchase agreement between the renter and the homeowner, and a percentage of your rent payment is applied towards your future down payment. So you might agree to rent the house for 3 years, and a portion of your rent payment is set aside. So that way, after 3 years, maybe that portion that has been set aside accumulates and is adequate to cover your down payment requirement. Maybe your down payment requirement is 5% of the purchase price. Maybe you want to do 10% of the purchase price when you buy the house in the future. So they'll calculate the payments so that every payment will contribute a portion. So that way, over the years that you have on your agreement, at the end of that term, you'll have that whole 5% or 10%. It'll be applied. It'll be credited to you as a future down payment or down payment at that time. With a lease purchase agreement, you are agreeing to purchase the home at the end of the lease. So if you decide at the end of the lease not to purchase the house, you can forfeit your deposit. You can forfeit that money that has been credited towards your future down payment. So this is a program that is intended for people, for renters that want to become a homeowner and they want to buy that house that they're renting. This is not a program that allows the renter lots of options. It allows them to rent for now until they buy, but it doesn't allow them many options at the end of the lease period, other than renewing the lease period and maybe buying more time before you buy. So the third option, personally, is my favorite option, but each of these might benefit certain renters for certain situations. This is called the lease with the right to purchase. Now, a lease with the right to purchase, we use a lease agreement. There is no option fee. So you don't have to pay up front an option fee to the homeowner to reserve a future price for you. With this program, you do reserve a future price, which is great, but you don't have to pay to secure that future price. This program does not have built-in savings for a future down payment. So your rent payments are strictly rent. At the end of that lease period, when it comes time to either buy that house or walk away, you have to have your own down payment money saved up because nothing was being saved up in your rent payments. As a result, your rent payment is lower. So this allows you to have a lower rent payment because none of it is being saved for the future. The responsibility is on you to save your down payment money for the future. You and the seller agree on a future purchase price when you sign the lease. So upfront, before you move into the house, you agree, if I buy this house from you in a year from now, this is the price that you agree to sell it to me to. If I buy it from you in 2 years from now, this is the price that you'll agree to sell it to me. So all of that is written out up front so everybody knows what they're getting into. At the end of the lease term, you have the right to purchase the home, but you're not obligated to purchase the home. That's why I like this program, because at the end of this lease period, let's say you lease the house for 1 year, as your lease period is coming to an end and you say, okay, I moved into this house that I loved, but now I realize I don't love it as much. You can walk away from the whole transaction and there's no penalty because you were just a renter. You never agreed and obligated yourself to purchase a house in the future. You just reserved the right to purchase the house in the future. But let's say you thought you were going to love the house. 10 months goes by, you're towards the end of your lease and you still love the house. Maybe home prices have appreciated 20%. And now you're in a house that you agreed with the seller on a future price, but no one predicted that the home values were going to go up 20%. So now you have equity in that house. You might feel foolish to walk away from that equity. So at that point, you would buy the house if you're able to, if you have the down payment money that's needed, if you have the credit, if you've improved those financial circumstances that were holding you back before, or maybe your job decided, hey, we're going to stay here long term. So if you're considering buying a house, do it. So if those issues are no longer issues, you decide to purchase a house, you can do that at that price that was agreed to previously. But the other benefit of this is if you say, okay, I want to buy the house, I love the house, but my credit still isn't where it should be. I still want to improve it, or the lenders are telling me I can't purchase yet. I need another 6 months. I need another year. You can renew the lease and continue renting. That's what's awesome about this program. So you can rent this house up to 5 years with this lease with the right to purchase program. So after 5 years, you're either not going to like the house anymore or you're going to buy the house because you're prepared to do so. But the cool thing is, if you say at the end of a year or 2 or 3 or 4, I don't like this house anymore, my family's bigger, I want to buy a larger house, or, all my kids moved out, I need a smaller house. You have the ability to do that without any penalty. Now, the only time there's a penalty is just like with any renter. If you move into a house and you rent a house and you damage the house, then there will be a penalty. But as long as you satisfy the obligations of your lease, there is no penalty. So this is a great program. Okay, so the minimum requirements, these are just some of them. These are not all of them. To do a lease purchase, you need at least a 550 credit score. You need a minimum monthly household income of $2,500 per month. That's household. So for all of the working residents of the house, the income should be at least $2,500 per month. You need 3 months of verifiable income. So you would verify that with W-2s, 1099s, tax returns. You have to show bank statements showing that you have at least $2,000 for your future down payment. And your debt to income ratio should be less than 50%. So 50% debt to income ratio means that your monthly obligations, your debt, cannot be more than 50% of what your income is. So if you have a $2,000 a month car payment, for example, and you make $3,800 a month, well, $2,000 is more than 50% of $3,800. Or maybe you have 2 cars that are $1,000 a month each, and your income is $3,800. That's higher than a 50% debt to income ratio. I'm using car payments as an example. A lot of people have other obligations, financial obligations, credit cards, car payments, all kinds of things. So your debt to income ratio cannot be higher than 50%. Okay, with the lease with the right to purchase, the annual household income has to be at least $40,000. The proof of income, you can prove that with W-2s, 1099s, tax returns, bank statements. You have to be able to show proof of income. And I see the typo up there. I fixed it, but I have the wrong PDF up. So no open Chapter 7 bankruptcy. You cannot have a Chapter 7 bankruptcy that's in the process if you want to do this program. You cannot have any disqualifying criminal history. I don't have a list of all the disqualifying criminal history items, but when you apply, they do a background check and you can't have any disqualifying criminal history. You have to allow at least 45 days from the date of application to move in. That's because they need time to purchase the house. In these programs, what's happening with the lease purchase and the lease with the right to purchase, you're applying with one of the companies that we partner with, and they will buy the house. The house is one of the ones that is available on the market for sale. They'll buy the house. So when we go shopping, when we go house shopping, we're looking at homes that are currently for sale on the market. Regular homes for sale, regularly, traditional home sales. So these investors that created these companies years ago that offer lease with the right to purchase and lease purchases, they are institutional investors with millions and millions of dollars, and they buy homes and they allow renters to have the option to purchase the homes from them in the future. And if the renter does not purchase the house, then they just keep it as a rental because they're investors. That's what they do. So what's great about it is it allows the renter to shop and look at homes that are available for sale online. The inventory of homes that are available are ones that are for sale online, the ones that you see on all of the real estate websites, like centralfloridapads.com. So what we would do is we would look at those homes for sale, and then once you identify a house that you like, we would communicate with the investor, find out how much that house would be on a monthly basis for rent, and if it's acceptable to you, then we make an offer, as long as you've been approved for the program. So the steps to securing your next home with one of these programs: you would communicate with myself or someone on my team. You apply online, you answer 6 easy questions that have to do with your income, credit, and criminal history. Once you have the pre-qualification, once that's done, you'll complete a full application with your employment and income information for all household members. The final application step is to pay a one-time $75 application fee. Now, we have several investors and several programs that offer these. Some of them don't charge a fee. Some of them do charge fees, but the highest the fee I've ever seen is $75. So that's worst case scenario. Once you're fully approved, our team will begin scheduling home visits with you. And as soon as you identify your favorite home, then we can submit it to the investor for approval. And if approved and you approve of the terms, we can make an offer. So the investor will make a cash offer for the house, which the seller will be inclined to accept the cash offer, which is great. And then the investor will prepare the house for you before you move in. Maybe the house needs new paint, maybe it needs new carpet. They'll fix it up in that way for you. They'll allow you to be part of that process. If you want to pick some colors, pick some carpet, they'll allow you to be part of that process, which is great. All right, so the next steps, what now? So if this is interesting to you and it's something that you want to entertain, the next steps for you, you have to make a decision. Do you want to continue renting the traditional way, where you don't earn any equity, you don't have options to purchase the home? Or are you interested in purchasing a home? Maybe you see all this and you say, hey, this whole thing I've decided I want to buy a house. So you can apply to purchase a home with a lender. You can also apply for the lease purchase, which is one of the options we spoke about today. If you say, hey, I like the lease purchase because they're saving money for me with every rent payment. I'm really bad at saving money. I like that they will help me save money so I don't have to think about it. I just make my rent payments, and at the end of the predetermined time, I'm ready to buy. that's the type of person that program is best for. Person that says, I'm definitely going to be a homeowner in 2 years or 3 years or 1 year. And I want help saving money because I'm not great at saving money, or maybe I am great, but this is just easier for it to be included in my rent payment. There's a lot of benefits to that program. Or maybe you want the most flexible option of them all, which is lease with the right to purchase. So lease with the right to purchase, again, at the end of your lease period, you're not obligated to purchase. You can continue renting. You can walk away, no penalty. You can rent another house somewhere else. You can move out of state, or you can decide to buy the house. So that is all for today. If you're interested, if you want to set up an appointment to speak with me one-on-one, you can take a photo or scan this QR code, and that'll take you right to my Calendly, where we can set up an appointment to talk. We can do a Zoom, or we can just have an old-fashioned phone conversation. But that is it. So thank you so much for spending 26 minutes with me watching this. I hope you found value in it. A lot of folks come to us, they're not ready to buy. So these programs are great for those types of people. But we also help buyers buy the traditional way. And we also help sellers sell for top dollar the traditional way. And we have connections where if you want to rent your house out, or if you want to get a rental, we can help you. So I'm Daniel Betancourt with Team Betancourt of eXp Realty. My phone number is right there, 407-375-9142. You can reach out to me there. You can email me at daniel@teambetancourt.com. You can also visit teambetancourt.com, and I'm happy to chat with you. Thanks a lot. Take care.